The ASV Fund is the flagship fund of GAO Capital. It is an Asia-focused, multi-strategy, multi-manager fund. And while GAO Capital has been around for more than 15 years, we started in 2008, the fund has been around for about 4 years now. As the name AASV suggests, which stands for Always Seek Value, the investment philosophy of the fund is really to seek opportunities in the best markets available to us. We look at opportunities based on 4 categories: 1, asset class; 2, geography; 3, sector; and 4, strategy. For us, there's no time when there are no opportunities per se, despite what people are talking about for the current markets. So if you look at how we started the firm, we started in 2008, 1 month before the great financial crisis. And then we started the fund right when COVID happened. So we feel that there are opportunities in all different types of markets. It's how we capture those opportunities. Going back to how or why we started ASV, it was because we felt that there was no fund out there in the market that could meet our needs to be dynamically opportunistic to capture a fund. So what we have in the market, and I know this because I've been allocating to funds for the past 20 years or so, there's always a fund that says, okay, I'm going to be focused on a particular region or a particular sector. And then when the time comes that there are less opportunities in that particular sector or strategy, the fund manager still continues on in it. And that's not in the best interest of the investor. So we started a fund where we would look at what is the best opportunity right now in the market. At that time when it first launched, we could see that markets have come down quite a bit. And that was when COVID first started. And the fund actually started in July 2020. And by that time, we saw that there's a huge opportunity on the upside. And so we said for equities. So we said, okay, equities is the asset class to go into. And then when we looked around and tried to see and scan the universe for where the best opportunities for equities would be, we saw that there was an unmet niche market in the ASEAN markets and also Australia. So when the fund first started, we had a fairly significant portion in Southeast Asia. As the markets evolved, we found new opportunities. So where are we now for ASV? So we see opportunities in Japan and India. So these are the 2 markets that we had not traded in when the fund first started, but we positioned ourselves to be ready for it when the opportunities become right for us to take advantage of it. So to talk about India. India was a market that, if you've been following the Indian markets, the index has been going up tremendously, but then there's a lot of volatility in the market. And for us, it was not so suitable for our fund, where even though we're aiming for 15% target returns, and we've achieved substantially more than that, we don't want a great deal of volatility in our strategy. So we waited for the time when the markets were more developed, when volume really picked up. And for India, volume really picked up during the COVID period. And for some other countries, volume came down after the COVID lockdowns ended. But for India, it steadily increased. And there were structural changes, for example, going from weekly options to daily options. So there are new opportunities that when it came out, we wanted to make sure that we're ready to take advantage of it. Japan is another market that has been long forgotten by the markets because there was so much focus for Asia funds on China. Obviously, a lot of funds then tried to pivot to Pan-Asia or global or even US markets. But Japan to us, it's a very unique market that needs a lot of expertise. And for us, we have in-house expertise and build relationships where we could better understand the Japanese market. For asset classes, we always had expertise in various asset classes. So it's not just equities. While we started out as an equities-only fund, today we cover equities, commodities, and rates. Rates is a particularly interesting field for us because with the equities markets going up so much over the past decade, there has been less focus on on rates, but then right now with government actions on rates, for example, in the US markets going up, and now they said that they might cut, and Japan being on the opposite end where they said like they will be increasing rates, that there's a lot of opportunities in that market that we feel particularly well positioned to take advantage of. So with the increase in asset classes and geographies that we're trading, how do we manage risk? So risk is a particular important field for us. And if you look at our team structure, the number of personnel who are focused on risk is actually more than the people who would pick stocks or focus on research per se. And there's a particular reason for that. And while we're not like the big multi-strats where there's very tight risk limits for each portfolio manager or each strategy, we do look at risks not just in the typical sense of net exposure, gross exposure, beta neutral, market neutral, and all these standard metrics. For us, we look beyond that to see whether there's risk in the whole strategy itself or the whole market. Just give a specific example. We were in some Hong Kong listed Chinese equities when the ASV Fund first started. But then when Common Prosperity came out, and we realized that it's not possible to just pick a stock based on the fundamentals of a company, because then the government might step in and say, no, you can't make any more money. Then we got out of the whole Chinese markets. I mean, today we have a separate fund for China Quant, which we believe is a better way to trade that market. But for the ASV fund, we decided if we cannot reliably predict whether something will go up or down, then we will not be in that market. Another example to our risk management would be how we had been investing in the ASEAN markets. So when we first started investing in Southeast Asia, there was this void in the market where there were really like no good managers left in the space because there was so much focus on China. And also because the ASEAN index had been on the decline for a better part of the past 10 years. So true to what we had thought, the ASEAN market produced good returns for us. And we thought that, okay, this is truly a sector that was misunderstood. Plus, investors moving away from China then moved to Southeast Asia. However, starting from the beginning of this year, we saw that the tide changed. One of the other metrics that we looked at for our risk management would be institutional inflows. And then we realized that, okay, if a company was doing well or sector was doing well, it doesn't necessarily correlate to the stock price moving up. That was when we realized that maybe this sector would be difficult to trade in. And as I have previously explained, if the investment philosophy of the fund is to always seek value in markets that have opportunities, then we would move away from such a market. So a key part of risk management would be on our operations as well. As we are moving into a new market like India, we have to make sure that we have systems that can trade that particular market. And it's not just about getting the license, which is more of an administrative issue. It's also like, how do we make sure that the money we put in is really there? For example, for India, we had to open new accounts with local brokers. We had to deal with a new local custodian. We have to get used to a new system of reporting that they have. So those are all part of our risk management that we look at as we expand our fund to new strategies and new markets. So in a nutshell, I think that the ASV fund functions really like a prop shop, or maybe like a well-run Michelin restaurant. We have chefs that on their own, they can probably open their own Michelin star restaurants. We have a very high pedigree team, and I'm very, very proud to work with them to produce this fund. But then everyone brings different aspects to the firm. But what we share in common is our desire to really make returns. It's not that, okay, I want to run the biggest AUM shop, or I want to run the best particular sector fund, right? It's really like we are coming together, we want to make money, but with the best risk-adjusted returns.